Good morning and good afternoon, depending on where you're joining us from today. Happy Friday. Happy August 1st. Wow, I can't believe it's August already. Super stoked that it's Friday. As you know, Friday's my best day. Love Fridays. It's been my favorite day probably ever since I was a little kid, right? Getting out of school, got the whole weekend to focus on. So that's what I'm all about, the weekends. I'm your host, Bill Haga, Executive Loan Officer with Rocket Mortgage Local. I always stress local because of my local pricing versus our call center in Detroit, Michigan. And I just pulled this up a little bit ago and I want to compare just so you are completely understanding what I'm referring to. So I'm looking at just posted rates, right? Based off of 720 credit scores, based off of probably putting 20% down, right? Everyone's posted rates. But listen to this, a 30-year conventional with me, um, just like I said, right off the rate sheet, no, nothing given for credit scores beyond that or anything else. But that's a 6.875 rate, all right, based off of my local pricing. And that is actually giving you a 0.25 credit. Yeah, you would actually get money back for that. The call center, that same 6.875 rate will cost you right now 1.125%. So let's do some quick math. I love math, right? That's what we're here for, numbers. 500,000 is popping out in my head, so that's what I'm going to use for a purchase price. Store that 0.25%. So if you did business with me versus letting your client go online and do business with the call center, I'm going to give them a credit of 1,250 based off of that 6.875% rate right now. Typically speaking, based off of what we're talking about in this scenario. All right. That same $500,000 purchase going to the call center would cost 1.125%, would cost 56.25. That's a big difference, right? Huge difference. So that's what I'm talking about, doing business with me locally versus letting your client just get online and go to the call center. Okay. So that's huge. All right. I hope everyone's having the best day of your lives. Lord knows I am. I'm up, I'm moving, I'm functioning. So, all great there. Welcome to Creating Opportunities. This is where the rubber really meets the asphalt. All right. We're going to talk about ways that you can connect with myself and generate more business, grow your business, help more clients, really help you become that ambassador of your community, right? That Coach Ella is constantly talking about. All right. So, you know me, I like to dive right in. Any comments, any questions, please let them fly. You've got my contact information on the screen. You can see the states that I'm licensed in. If you're licensed in one of these states, reach out. All right, let's talk. Let's set up a meeting. Let's go through what you're currently doing and let's find out what I have that we can add to what you already have and see how many more people we can help. All right. Today's session is going to be great. I promise you. All right. So today's agenda, let's talk about the market. Holy cow. Everyone's talking about housing. Love it. Finally, we get some respect out there, right? Not really, because we're still the last ones to get taken care of. Now, just sit here and think about this. The last 2 years, just this past 2 years, right? Rates are supposed to have been coming down. Rates are supposed to be coming. They never came down. Here we are out there busting our tails, doing everything and talking the same talk, and nothing really happened. In fact, I mean, rates even went up at times, right? Because it's market driven. So I know when the tariffs came in, when President Trump issued tariffs that first day, rates jumped 0.375. I know because that's the day I submitted my contract, right? Timing's everything. All right. But think all the everything that you've done for the past 2 years is now going to be paid off here in the next probably 2 months, maybe even 1 month. right? We hear Trump constantly saying, lower the rates, lower the rates, lower the rates. Not 1%, 2 to 3%, right? A big cut. So we've got to be ready for this. All right. As boss ladies, boss men, we got to have our business prepared. So all the work that we've done is now going to come full circle. All right. But we still have to keep touching, right? Coach L is constantly talking about being consistent. As long as you're consistent, touching your database, they're always top of mind, right? You're top of mind. So as we get into this a little deeper and new programs and things of that nature that we're going to talk about, it's all focusing on us. All right. All about how we can create more business. But rates is really where it's going to start, and it's right around the corner. So like today, our rates dropped on certain categories anywhere from 0.125%. This is pricing. All right. Pricing of the rate dropped on a 15-year 0.125, and on a 30-year conventional 0.375%. Refis, let's talk about refis real quick because you've got a list of clients that are ready to refinance. I mean, we've got rates now down as low as 5.75 and 5.49% on refis. So a good way, all right, you're constantly touching your database. You're the ambassador. That means that you're the educator. You've got information for them. All right. So any information is good information as long as it's about what they, are interested in. And that's buying a house. All right. So anything housing data is great stuff to be passing on to your clientele. Okay. I'm going to back off enough of that pricing. We know what's happening. We know where the economy's at. If you're into micro and macro economics, macro is exploding right now, which will soon lead into the micro piece. The micro piece is what the feds are focused on, right? Because that's kind of more long term versus short term. But wow, what an exciting time. The more of these country deals based off of imports and exports, once more of these, come full circle and get signed and things start moving, then things are even going to get better. All right. So now's the time. I know we've been running for 2 years and have gotten really that much effort out or anything out of it. Right. It's been a lot of work, not much to gain. However, that's coming. All right. So let's focus and let's make sure that we're out there touching our clients, or especially that database that's sitting there. All right. So more about today's agenda, getting more clients pre-approved. All right. That's huge. I mean, what we just did, I can't even talk about it, but I'm going to have to in just a few minutes. Another thing that we're going to be talking about, solving builder issues with our guaranteed buyouts and our bridge loan. These are huge. All right. We also have even more new programs coming out. It's going to help you build your business even more. All right. And we're going to talk about those as well. Let's go ahead and dive into these things. Um, I want to talk about getting more clients approved. Currently, the entire industry uses what we call safe harbor. All right. I'm going to just read off here and explain to you what safe harbor is. Under safe harbor, a loan must have an annual percentage rate close to the average prime offer rate to qualify. Okay. Let me break that down a little bit. It's basically all these guidelines that shrink qualifications, right? So DTI, um, cost of the rate, these little things that cause all kinds of hectic on our side when we're trying to get someone approved, right? Especially those people, those clients who income is low. I mean, you're doing everything you can to get them to fit in there, and it's complicated, right? Because of all these guidelines and system that's checking everything. Well, we just expanded our guidelines. Let me repeat that. We just expanded our qualifications for a buyer to qualify. We are now adding what is called a rebuttable presumption. A rebuttable presumption. All right. It allows for a wider APR margin, meaning loans with slightly higher interest rates will now qualify. Prior, they didn't. Right. So let's talk about, you've got some clients that are on a bubble, right? I've got a list of clients too that are on a bubble. So they're on a bubble because their income's low, right? It's hard for them to qualify. With these new guidelines, we're going to be able to qualify more of these buyers. Okay, that's huge. I can't speak enough on that. All right. So if you've had anyone turned down, I would say in the past 3 months, right? Let's get those conversations going again. Let's get them filling out loan applications. You'll be able to click on a link um, that'll take you right to my loan application that you can share that with your clients. All right. But these people that have recently been denied because of debt to income ratios, this is a time to get them back into the circle, right? Get them back in, get them looking again, get them pre approved. And once again, let's grow some business. All right. So that is that. So let's see if we can get them approved on these expanded guidelines. Okay. Um, Here's another thing. When you boss ladies are making offers, we want to make sure, Rocket, myself, we want to make sure that you have all the confidence and comfortable with that offer, knowing that that client is approved. All right. In order to make sure that we have that feeling together, we're moving our underwriting up in the process. So now, as we're pre-approving clients, and I personally, I mean, I've been doing this my entire career, but I collect all the documents. It, some people love it, some people hate it. To me, it's my job. It's my job to make sure that you qualify. If you're not giving me the documents and I'm constantly trying to reach out to you you're not ready. Not ready to move forward. Okay? If you really want to be pre-approved, then you want to come with Rocket, right? You want to come with myself. And here's the reason why. Because now, as I'm pre approving everyone and I'm collecting all the documents, the moment that I finish working the numbers and get a pre approval, I'm going to send you an email, right? With the pre approval and the breakdown of the estimated numbers. So you've got that. But right after that, I'm submitting the file into underwriting. Yeah, without a contract. That's absolutely right. I'm going to be submitting your file into underwriting for an underwriter approval. Okay, that's huge. All right. So then now we've got a VAL, right? A verified approval letter that can now go out to you for the client. And at that point in time, it's verified. So the credit will be checked, their income will be checked, their assets will be checked, as if everything's already been verified, right? That is the strongest offer that you can put on a table. Someone already approved by an underwriter, right? Everything's been checked. We're ready to go. We just need the property, right? What that also does, if that property is empty, we can probably close it in a couple weeks, right? Everything's already been verified. Funds are already in the account. We're not waiting on anything other than appraisal and title. That's it. All right. So that's huge. All right. Just think about that for a second. Now you're making an offer knowing that an underwriter looked at the file versus just me. I know for 23 years, just me was fine. But if it can get better, right? Because I mean, I look at things, I look at bank statements, I'm looking for large deposits, everything that can impact the decision making. I try to do all that up front. But once again, I'm not a guideline expert like an underwriter is, right? It isn't my license number that says, hey, they're approved. No, it's that underwriter. That's their responsibility. And that's what they get paid for, right? They're the ones who approve and don't approve based off of guidelines and what they see or hear. See or hear. Yeah, that's true too. Okay. So that super impressive in both scenarios there. Okay, so let's go ahead and I'll move forward. The next thing I want to talk about is contingency issues that builders have. All right. Builders are there to build a house, sell a house, close on the house, not be delayed closing the house. Okay. So, what kind of things delay a closing? Contingencies. That's why no one likes contingencies. Okay. We have programs that remove those contingencies, right? So, if you remember, I said that in 2025, Rocket Mortgage wants to be the preferred lender for all these builders out here who currently don't have in house financing. Okay. There's a lot of them. I mean, there's a ton of them. Okay. That's who we're interested in. We're also interested in a bigger builder who wants to use us just because of our programs, right? Not everyone has every program that we have. I can promise you that. So, once again, we're adding to what the builder can do and who all he can get approved, right? It's all about approving people. So let's talk about the builder solutions. So we have what we call guarantee buyout programs. All right. These are cash offers. All right. So this is like an iBuyer, if you will. All right. So if you have someone who needs to sell before they buy or remove that contingency, right, of selling their home before they purchase, that's a great lead for me. Okay. Perfect. Perfect client. All right. Send them all day long. All right. Because we have the programs to take care of this. So let's start off with the immediate offer. As I said before, once the loan application's filled out and completed, once I have documents, my complete list. Then the file goes in. I refer it over to the quick buy folks. What they're going to do within 24 hours, they're going to contact that client, introduce themselves, ask them some questions, get information about the home, and then within 4 or 5 days, they're going to have an actual offer, a cash offer. Okay. And that's called the immediate offer. At that point in time, those can close within 14 days normally. You don't have to get the house ready. You don't have to do anything, boss lady. Just collect your agreed upon negotiated commission and you get paid. That's it. Pretty simple. All right. So that's the immediate. That's someone who perhaps hasn't had any bites on their house, no offers coming in, but yet they need to move, right? Time's starting to become an issue. Um, Maybe it's just a situation that they have to get up and move quickly. Maybe it's, health of a loved one, a family member, whatever the case may be, right? Life is full of, I call them misdirections, right? Because they take us off the path, the direction that we're currently on. So you've got all these misdirections going on in your life that are pulling you in different directions. Okay. So these programs help. Okay. So let's say that you as the agent, boss lady says, "Hey, that's a good offer, but I think I can get more for the house." Okay, great. They'll give you 150 days to sell the property for more. Okay. Um, let's say that we've got a client in a situation to where, let's say they're moving out of state. All right, and it's how complicated and how hard it is to move and find a place, and I mean that's just a nightmare. And I just heard of a nightmare in Alabama. All right, I hear about the nightmares because I help fix a lot of these, right? So anytime something drastically happens, like a couple in Tennessee selling their $750,000 house that's free and clear, and they've got their U-Hauls and everything loaded, sitting down in Gulf Shores while their sellers or while the buyers don't show up in Tennessee and close on their home, right? Just think about that for a second. Your entire life is in two moving vehicles, semis. You've already put all the money down, all the effort, everything you've done for the new property, and now your buyers don't show up, or they walk from the table, right? I've seen that happen before. So this is a scenario that's unfolding as we speak. I got a phone call just a couple days ago about it. It was actually the listing agent. Like I said, I'm known to fix a few things from time to time. He said, "Bill, I hear that you can work magic." I said, "Well, sometimes I've got a cape, and God works through me. That's all I know." But at the end of the day, I'm happy to help. So he took my information, passed it over to the buyer's agent, who I've never spoke to. I reached out to her. She said, "Oh my God, Bill, it's horrendous. I can't even believe it's happening." And I said, "Okay, I get it. Let's figure it out." Right. So 9 out of 10 times, what seems to be the problem isn't really the problem. There's always deeper stuff. Long story short, I've got them approved on the bridge loan. We're pulling some cash out that we needed from that purchase, right, in order to buy the new home. So, I mean, I jumped in there with both feet. That thing is moving, um, and I don't see any issues with it now. But it's all a matter of just getting it closed at this point in time. Okay, and hang on one second. Okay, sorry about that. All right, so that is the I programs, right? The I buys. Now, let's say that once again, let me get back to the person who wasn't moving right away, right? Because that's tough. I mean, I see it all the time, and we're trying to get them to close the same day or the day after. And I mean, it's tough, right? So, a way to take a little bit of that pressure off is what they call a lease back. So, they'll still buy the house from you, still pay you, boss lady, your negotiated commission. Now, the seller is now renting the home from the new buyer at a, I think they use just the average rents in the area for their rent calculation. Okay. But at that point in time, they've got all their money. Now they're just sitting there leasing, and it's just a day to day lease. There's no leases, monthly leases signed or nothing like that. They can roll out at any time that they want. Okay. So what that does, it gives them the freedom, right? If I've got all my money and I don't have to move yet, and I'm still sitting in my house, you know what? This weekend I'm going to golf course. By God, that's where I'm going to buy. I got money. Let's go spend the night in the hotel, weekend in the hotel. Let's go down there and let's really see what's going on. Right? That's how you get that buyer from one location to the next with the least amount of stress. Okay. And that's key. I mean, this poor couple from Tennessee, I mean, if I could reach through the phone and hug them, I would have been hugging on both of them. I mean, mind you, they're 2 days. They don't have, they're they're in a hotel and they don't know what's happening, right? Until I spoke to them. So a lot of tears, a lot of emotions, and I'm excited because I know there's going to be even that more emotions and excitement once we get them some keys. Okay, so enough of that. All right, so let's talk about our bridge loan. All right, bridge loan's another solution for these contingencies. This is perfect. Like the couple from Tennessee, they have tons of equity in the home, tons. All right, so let's take some of that equity out, not all of it. You just need to cover your down payment and your closing cost. Okay, depending on debt to income ratios, we may take more to pay off something, but I'll structure this thing so it fits and it works. Okay, one client was trying to pull all their equity out. No one's going to give you 100% of your equity. That happens when you sell, okay, and you close. But that's just not going to happen, right? We're going to take you up to like 80% max cash out. I think we go up to 500,000 loan limit on the cash out in order to make that happen. Okay, so 500 grand will cover a pretty large deposit, right? So that's all you're covered. You're good there. But that bridge loan is perfect because once again, these programs, the reason why they remove the contingency is because we're not now keeping that debt to income ratio into play. Okay. With these programs, because these are short term financing programs, right? They give you 150 days to sell a home. If you don't sell a home after 150 days, then that payment changes from an interest only and goes to a fully amortized payment. Okay. At that point in time, I would suggest renting it, right? If you can't sell it, next thing to do is rent it. Simple enough, solves the problem, right? You already got your money out, you're already in the new home. That's already taken care of. So no worries, just find a renter. Simple enough in this market, right? Tons of renters out there. Okay. I think I've covered all of that. All right, so now let's talk about new programs. They just keep coming. They just keep coming. I love it. All right, so these are non-agency, non-QM programs. All right, so let's talk about what a non-QM program is. So QM stands for a quality mortgage. All right, that means it meets all of Fannie Mae and all of Freddie Mac's guidelines. Excuse me. There's two of them. There are differences. Sometimes you can't get a borrower approved on both. It may only approve on one or the other. Okay. So that's kind of how we use our system uses both. Okay. Now moving forward with these expanded programs, now we're going to be able to do those properties that don't fit Fannie Mae and Freddie Mac's guidelines. All right. And those are non-QM programs. Okay. Non-agency. All right, so let's dive into these right quick. Um, non-QM features. Excuse me, this cough is coming back again. Let's talk about non-warrantable condos. I know down in Gulf Shores, Orange Beach, Florida, California, all these coastal lines, right? They have a ton of non-warrantable condos. All right, these builders went in there and just built what they thought and didn't really think too much about financing for the buyers of those units. Okay, these programs have been out there for a while. I've sold them for my entire career. They're new to Rocket, and these have a little spin, right? They're a little better than what I've had before. Um, so these non-warrantable condos have always been an issue, and couldn't close them here. Well, now we can because those programs just came available July 29th. So awesome stuff. So let's talk about non-warrantable condos. So there's a ton of them out there. They are marked by Fannie and Freddie, right? Saying we don't want them. All right. So in those situations, these are perfect. Okay. Let me see here. I'm going to talk about. So now these non-warrantable properties we can now do. All right. Now I want to go into some programs that will they kind of fit this non-QM, non-agency scenario. Okay. Asset depletion. So there's a lot of retirees who have a lot of assets. Okay. If you try to qualify them just off of their Social Security and pension, if they're lucky to have a pension, right? Most people are currently, just using Social Security as their retirement. So it's real hard to get them approved. Now, moving forward, as of the 29th, let's say that they've got find my calculator. Let's say that they have $700,000 in the account, okay, as an investment. I can now take that and divide that by 84, and I can now use $8,333 for their monthly income. Huge, right? My gosh. Maybe they're retired, but they don't want to go from a $750,000 house to a $100,000 motor or, manufactured home. No one wants to do that. So this program will allow them to qualify for more. Okay. Make things a lot easier, stress free. We don't like all that. Okay. So asset depletion is huge when it comes to anyone who has a lot of investments, right? But yet don't have a lot of income that they can show on a monthly basis. All right. Next thing is our bank statement program. All right. I say this all the time. This is a perfect program for anyone who's self employed. When you're self employed, you write everything off, right, boss ladies? Trust me, I see the majority. I shouldn't say the majority. I see a lot of boss lady loans. Okay. A lot of my clients are real estate agents, right? Because I build relationships with all of you. So it's normal to come to me with your own purchases and refinances. So I've had a number of these, and every time I look at your actual income, you're just like most of us, right? Who are self-employed, we're writing everything off. We're not trying to pay any taxes on anything. That tickle's coming back. So with this bank statement loan, now we're going to take 12 months of your business bank statements. If you have all your business and all your personal separated, right? No co-mingling. 12 months of that. You're a real estate agent, so you're providing a service. So we're going to total all those deposits. We're going to take 20% off the top because it's a service and not a product. And then we're going to divide the rest by 12. And whatever that is, that's going to be your monthly income that we're going to use on the loan application. All right. Got a real estate agent in Alabama. Her husband's also self-employed. Okay. Their tax returns wouldn't allow them to buy a car, let alone a home. Okay. Their accountant's amazing. Um, However, they are pre-approved to buy a $575,000 house based off of bank statements. Okay. So that's huge. You have anyone who is running a business owner, 25% or more, we can use some income from there. Okay. We can use multiple business accounts even. I think we can go up to 3 now, which is huge, right? Some of us have multiple businesses. We want to be able to use all your income. So we've expanded that, which is huge. Now, this is a 30-year fixed program, and we just added a 40-year, right? 40-year. First 10 years has an interest only option. If that's not helping someone self employed, I don't know what is. That's huge, right? We allow them to qualify for more based off their bank statement deposits, personal or business. And we now added the interest only option. Once again, I'm shocked by this because self employed people are normally considered a higher risk. But yet, I know that my interest rates are for this program, right? We're showing bank statements, not true income. And this interest rate is just as competitive with any conventional program that I have with people showing their true income. That's huge. All right. I can't explain how big that is. Okay. So that's our bank statement program. 12 months. That's all you need. Okay. All right. So, like I mentioned, this interest only is now coming to not just bank statement programs or jumbo programs. No, we're going to have loans as low as 125,000 that offer an interest only option. I haven't heard of that either. Right. I mean, a bunch of firsts here. All right. So you take all this information. I know it's been a lot in this past 30 minutes. So we covered a ton, right? But let's set up an appointment. Click the link. Let's schedule an appointment so we can sit down and analyze your business. Let's find out what you're currently doing, and let's find out what we can add and grow your business even further, right? I'm telling you, this builder business, if you currently don't have a builder sending you business, you're missing out. Okay. I've been missing out for years because I've tried to chase the business and it's complicated, right? Not so much now. All right. Keep in mind in the near future, we're actually going to be lending money to the builder so they can build on the lots that they have. Can't wait for that, right? But that's coming. So once again, we want to get in front of these builders now. Okay. So if you got builders in your community that meet the criteria, right? They build a number of homes a year, but yet they don't currently have in-house financing. That's it. There's a ton of them out there. Okay. Want to start that conversation with them? We can get on a phone. We're putting together a PowerPoint presentation to where we can pull out agents, put a new agent in, pull out the builder, put a new builder in. Boom, that quick, we got a new, presentation for the next builder. It should be that simple. Okay. So all these things to help you, all good things, allowing us to create more opportunities among us, right? That's the whole idea. How to use our programs, how to use our services, how to use me to the fullest. I mean, that's what I'm here for. Okay. Like I said, I know it's been a lot in this past 30 minutes, but at the same time, as you're listening to what I'm saying, you should be thinking about past clients or current clients who fit these scenarios. And let's get my link to my loan application over to them right away, so we can get them pre-approved and get them moving. Okay, let's get some people pre-approved. All right, guys. I think that's everything that I've got for today. Thank you for your time. Thank you for your business. I'm Bill Haga, Executive Loan Officer with Rocket Mortgage Local. Let's get them pre-approved. Let's get them under contract, and let's make it happen. This weekend, my phone's on. I have zero plans other than work. All right. So, what does that mean for you? If you got a client who needs pre approved, call me. If you got a client who's got a question, call me. If you got a family member who's got a question, call me. Use me. Right. If my phone is on, make sure that you're utilizing it the best you can for your clients. Right. We're here to grow your business. So let's focus on your business. That's all I've got. Thank you and have a great weekend, everyone. Take care.